Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that come in with a strong buy consensus. And not just that, but they have all buy ratings, not a hold or sell in sight. So today we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. Before we jump into those two stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you've downloaded the TipRanks mobile app as well. Links are in the description down below. Let's get right into our two strong buy stocks. First up, we're taking a look at Live Nation. Live Nation Entertainment trades under the ticker LYV and is currently priced at $96.81 per share. Over the past year, the stock has gained 18% and has climbed over 5% in the last 3 months. The company is a major player in entertainment, specializing in putting on live events, particularly concerts. They are known for bringing live performance artists to stages around the world, playing any genre at any scale, from multi-day, multi-stage festivals to small local clubs. Looking at the numbers, they produce approximately 44,000 concerts every year, including more than 100 festivals in more than 45 countries. These events play to more than 120 million fans annually, with them selling over 550 million tickets to their events. Live Nation shared their Q1 earnings report on May 2nd. Now, they did come out with a much wider than expected loss, but that was due to one-time accruals. Besides that, the company had their biggest quarter ever. For the first quarter, they did report a loss per share of 53 cents, which was 35 cents wider than anticipated. But they did have a huge Q1 with their revenue of $3.8 billion growing 21%, and also growing 21% was their 23 million fans. Looking at the year ahead, they already have 85% of their large shows booked, which is up in the double digits. Management noted that while operating income was impacted by one-time accruals, they're on track to deliver another record year with double-digit AOI growth and years of momentum still to come. Following that quarterly report, we did have a 5-star analyst from JP Morgan weigh in. They said that Live Nation surpassed industry expectations by about 15% in both revenue and adjusted operating income, which has reinforced confidence in the company's financial trajectory. And their reiteration of their forecast for double-digit growth in their AOI for 2024 signals a robust outlook. Their bullish stance is also supported by the potential for organic growth through fan base expansion, increased on-site spending, venue development, and new sponsorships. Now, Live Nation is dealing with a Department of Justice antitrust lawsuit that claims Live Nation has leveraged its dominant position to stifle competition in the live event ticketing market. But even in the face of this, we did have an analyst just last week upgrade their rating on the stock to a buy. They noted that the Department of Justice investigation continues to hang over the shares, but breakup concerns are overblown, creating an attractive entry point for those willing to take a calculated risk. The firm's work points to nearly 20% upside as any risk from regulatory interest passes, confirmation of which should be forthcoming in the coming months. The Live Nation stock comes in as a unanimous strong buy based on 16 current analyst ratings. And analysts' average price target comes in at $120 per share, which would be an upside potential of 24.65% from current prices. Looking at our detailed list down below, you can see that recent upgrade here from Redburn Atlantic with an upside of over 18%. We have a high-end price target that's up at 34% upside, and we have a couple at that price point, and a low-end price target from TD Cowen here with an upside of over 11%. For our second strong buy stock, we're taking a look at Halliburton. They trade under the ticker HAL, currently priced at $37.30. Overall, their stock has climbed 31% in the past year and is up 6.75% in the last 3 months. Halliburton is one of the world's largest oilfield services companies. They play a vital role in the energy production chain, encompassing various technical and engineering functions. They provide the expertise needed to operate oil and gas wells, conduct horizontal drilling and fracking operations, maintain fluid pumps and pipelines, and safely decommission and plug non-productive wells. Halliburton released their first quarter results back on April 23rd, where they did post both an earnings and revenue beat. For their first quarter, they reported earnings per share of 76 cents, beating estimates by 2 cents per share and adding to their long list of earnings beats. For their revenue, they reported $5.8 billion, which grew a couple percent year over year and beat estimates by $120 million. The company did see their international business deliver their 11th consecutive quarter of year-over-year growth. The most recent buy rating on the Halliburton stock does come from a 5-star analyst at Jefferies just a couple of weeks ago. They said that their buy rating was based on a thorough analysis of Halliburton's financial outlook and market position, especially in light of their recent quarter and guidance for 2024. Their optimism is fueled by their reaffirmed 2024 outlook, which signals continued growth into 2025, underpinned by robust international expansion, including markets like Saudi Arabia, as well as a stable contribution from North America. Plus, there is an anticipation of potential upside in 2025 as gas markets rebound. The Halliburton stock does have 14 current analyst ratings, all coming in with a buy. And their average price target comes in at $48.85, which would imply an upside potential of nearly 31% from current prices. Looking at our list down below, we can see that most recent rating here from Jefferies at $50 has an upside of nearly 34%. Our high-end price target comes from Barclays with an upside of over 44%, and our low-end price target, we have a couple around the 20% upside. So that is a quick look at two stocks that come in with a unanimous strong buy consensus from Wall Street. Let me know your thoughts on these two companies in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at, so please make sure you always do your own due diligence and research. If you made it to the end of today's video, make sure you've hit that thumbs up button and that you're subscribed to the channel as well. Thanks so much for watching, have a great day, and I'll see you back here next time.